All right, hello and good morning. This is another installment in the video series, Planning the Week to Be. This is a Sunday morning video series that I do on this channel. So let's go to the weekly chart in Dixie to start. Make sure that you guys can see my screen. You can? Good. Okay. So we've on the weekly chart, obviously, we were in a bearish trend with Dixie, bullish for foreign FX, and the dollar index hit a what I would consider to be an important key level, which is the equilibrium of the range at $98.68 on the index. Now, there's obviously, if you were really bullish on the dollar, you could say, and this is the point where we will react, and this is the point where we can, well, where price will push much higher, and expand all the way up. This is another. In other words, this would probably be a quarterly swing point opportunity if you were really bullish on the dollar. Now, I definitely think that there's reason to believe that we need to give back a little bit of ground. Foreign currencies need to give back a little bit of ground, and that the dollar needs to gain a little bit of ground. And I'll show you what my reasoning is. So basically, if you look at the daily chart on DXY, now we have a succession of consecutive fair value gaps. That's now that we're at premium and that we've wicked into premium twice and then closed above. I'm sorry, we've reached discount and we wicked into discount twice and we closed above into premium. So in other words, the hallmarks of a potential weekly reversal are starting to get kind of baked in. And I'll show you on the euro and the pound, particularly the euro, what I'm seeing as more kind of clues or more confluences as to why price might want to reverse at this point. But we have four consecutive fair value gaps, four large consecutive fair value gaps in Dixie. And what I've done is I've actually highlighted this propulsion block, or potential propulsion order block. So a propulsion order block is basically like if you're in a bearish trend and it's a target for price to retrace into and then reverse for resumption of the bearish trend, right? So if it's a bearish propulsion order block, and it works just like a typical Romeo order block should. In other words, price can dig into this swing high, fat body candle, swing high here on the daily chart, fair value gap following and another fair value gap, right? And I think we have a pretty good setup now. In Romeo talks about 3 entries for every CRT, and so if this is the range that we are doing a CRT of, we've already had technically he'll talk about 4, but because the kiss of death is a final one, but we've already had 2 of the 3. So we had model number 1 up here, and this is actually a 2-month model, in my opinion. This is a 2-month model because we have, if you're looking at it in 2023 Turtle Soup model framework, this is the origination candle. This large wick is essentially an order block, and then we have 1, 2, 3, 4, 5, 6, 7 2-month candles, which gives us the idea that the dollar weakness might persist until literally the end of the year, which is 3 2-month candles from when the distribution started on July 1st. So if July 1st, and then that's actually the candle that we're in, that candle is about to close soon, which is another reason to expect a little bit of weakness. So if you're looking for a pure retracement play, then you might look at the close of one candle and the beginning of the other candle if you're looking for kind of counter trend, weakness in the trend, because of the way that candles form. Candles, they open. A classic bearish candle like this one will open. It will put the high in. It will distribute all the way lower, and then it'll set the low near the end of the time it takes for the candle to play out, and we're near the end. And so to think that this little that little daily candle stab into the lows here might be the end of, or sorry, the low of this particular 2-month candle is actually very reasonable. And also remember that if in pure CRT terms, this is still candle number 2. So candle number 2 has a potential to form kind of a hanging man, or not a hanging man, but a hammer. A hammer with a long lower wick, and then that long lower wick will be later distributed on and taken out. So going back to the weekly chart here, if that hypothesis is correct, then what we do is, and this is Romeo's, so I forgot to talk about the, we'll go to the daily chart one more time. So model number 1, breaker. So I would say that, and this goes into, have we had our breaker entry yet? Have we had our breaker entry yet? Well, a 2-month candle would be essentially like a 2-day, and this is a really obvious breaker, this wick of this 2-day candle that sticks out. But other than when we initially, this large down close candle with this doji, other than that, we haven't really exploited the breaker as much. So this breaker could be, I'm going to get rid of that for a second, that propulsion block, because now that I'm looking at this, the consequent encroachment of this breaker could be potentially like an upside target if we do get a weekly time frame model playing out. So this would be quite the reversal. The thing about the price action is we're just below the trend line. So if we do reverse over the period of 2 or 3 weeks, then we need to do it fast. Like, we need to do it very efficiently, because, so check this out. So to get back onto the trend line, we'd essentially have to go, like, if this were a 1 week 2023 model turtle soup, so if this is the origination candle, which that is a really good looking origination candle. I mean, it's really just awkward hanging out there, that weekly candle there. So if you take that as number 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Okay, so it's not, so this is tricky. I mean, this might not actually play out, just because there simply might not be enough momentum to sustain this. We should get some response. Now I'm back to like the propulsion block idea on the daily, where we might get a daily CRT, right? And then we might have like a pause, and then get a little bit higher and then drop down. But for us to violently pull all the way back here and then violently pull all the way back down to the trend, it could happen though. It could happen. Because so we really haven't had our breaker entry, is what I'm trying to just warn you guys about. So let's go to the euro really quick because I think the euro gives us a little bit more clues. I just want to point this out to you guys. So here on the euro, if next week's candle is a doji, the following week's candle, and this is like this will be a huge tell with the euro. So the euro is in the same place as the dollar, where it last week with the very good, very strong bullish candle last week that I was able to call this. So I called essentially like a large up close candle into the premium of the euro range that we're in. And again, this is just like Dixie, but inverted. We're in a 2-month 2023 turtle soup model. So in other words, 1, 2, 3, 4, 5, 6, 7, 8. So we're expecting this. Oops, that's left over from last. We're expecting this trend line to frame the price and just generally act as a linear average for price up to the target, which is I have really strong conviction still that by the new year, by December 31st, that we'll see it. 1, 2, 3. So it actually, the trend. I'm glad I looked at this because that trend line was drawn a little too aggressively. We'll lock that in there. Going back to, so here's the problem with being super bullish on the euro right now. Number one is we've gained more ground than we'd be expected to on average. In other words, we're pushing towards the upside of this projected linear envelope. And so it's time, and again, we have consecutive daily FEGs. We have buy side imbalance, sell side inefficiency, to put it in ICT terms. On the daily chart, there's something really suspicious I want to point out to you guys. Look at the low of that daily candle. Let's zoom into the low of this daily candle right here. Actually, in this one too. So we've got two of these. We've got, actually, that actually does have a candle, or a wick rather. That candle does have a little wick. But this one doesn't. So this is the one that's causing me a little bit of like reticence in terms of being bullish. Is we have a bottomless daily candle, and we also have this very and you know this if you traded the euro last week, but it's kiss of death price action. It's not 2023 price action. So there wasn't really a proper time frame 2023 model to push us up higher into the equilibrium point here. There was only a kiss of death CRT, and I think, and not only that, but this was an SMT, a daily time frame SMT with the pound. And one thing I've noticed about the market making is when you have a bottomless candle in a bullish trend, it can act as a target. And when you have an SMT, especially a daily SMT, in a bullish trend, it can act as a target. In other words, they love to retest SMTs with wicks. So if it's an SMT on a daily time frame, then you can expect a daily candle wick to test this. The other thing Romeo asks us to look for is FVGs on the opposing side of price. I don't know if you guys remember this one, but Romeo, and there's a nice daily time frame FVG on the opposing side of price. So that sets us up for a daily CRT, pause CRT most likely, stab into the low, and then a quick reversal higher to resume trend. That we're very well set up for that. One thing that would be like the more extreme version of this hypothesis would be, again, to try to do what I did with the dollar and to look for a bearish 2023 entry, and to say, well, what if it's like, it would take 3 weeks for that thing to really play out, or at least 2 fully distributional weeks, like 2 down close candles, with the third being both the exit of the bearish 2023 and that's when you get your full breaker entry, because that's when you'd expect to push down further down into the. And so here, I'm talking a little bit too fast, but basically, if this daily CRT gets momentum to the downside for the euro and FX really starts looking pretty bearish, then what we have the potential to do, and this is still reasonable under our overall framework, is you have I think 10 weekly candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Okay, so it's the same position as the dollar, where it's 13 weekly candles, which it's just out of my. It's just too long. Like I really don't expect price to go all the way down here and take 6 weeks to do so. That's not really my base case, given that would be extreme. Like if price paused this much, if there was this much digestion in foreign FX, and then to stay on the trend line, we'd have to take 6 weeks to distribute, with the potentially the 6th and final week being like a good wick, in the last distributional candle kind of being a doji. But then it wouldn't be until Monday, October 12th, where you would see a resumption in the bearishness of the dollar, and it would have to blast back up into the trend line. It would have to be like really posy and really boxy down here, and probably even target this as a 2-week order block. And then on October 12th, it could dig into it, and then it would just blast back up, and have a huge surprise that week. Is that a CPI week? Over the 2-week period starting in October 12th. So like mid-October 2-week period. Let's just look at the calendar really quick. What do we see? It's got to be a CPI. Yeah, it is a CPI week. And CPI is likely the most, obviously NFP is always really important, but CPI is always very, very, very important. But yeah, and by the way, next week is, just now that we have the economic calendar pulled up, we'll look at next week. Here. Next week we only have the Fed's favorite measure of deflation, which is the PCE deflator, which basically is used to take nominal GDP or real GDP. It takes nominal GDP and you use the PCE deflator and you just use basic subtraction and it turns it into real GDP. Nominal and real. So it's basically a much more conservative measure of inflation. A lot of people think that, and this is a little bit kind of conspiracy theory stuff, but a lot of people think that as a means of manipulating the public at large and various things like the Treasury, inflation protected security market and all that CPI undershoots true inflation. And if CPI undershoots true inflation, then what is the PCE doing? The PCE must really undershoot true inflation, because the PCE is always, it's not only lagging the CPI, but it's also like way under, representing it when you do get bouts of inflation. So these are the two. Next week, I think next week it will definitely be a doji, right? Just to really sum up this very long story here. But it's the week after that that'll really show. So like next week, the week ending 8/28, which is what this video is supposed to be on. I'm thinking it's going to be a doji, a weekly doji. So I think depending on what you're trading, like for example, I think the pound might be the one to do this. Boy, these highs, these like relative equal highs in the euro on the daily chart, like it would be the way that price moves lower, I think will be a huge tell. Like the way, like I think we have really good odds of this being a daily CRT. And obviously it's setting itself up for it to be a pause CRT. And that just like fits like a lot of different, that fits a lot of different frameworks. So like we could pause CRT all the way until NFP, right? Like we could literally just grind lower and with the dollar grind, slowly grinding higher, and just use NFP as a trigger. And that might be one of the ways to like, yeah, but it wouldn't take 6 weeks. That's the problem. So anyways, yeah. So that's like my base case is that there will be liquidity, there will be volume taken out of this thing. I mean, we could be really efficient, just large down close candle on Tuesday, Monday doji, large down close candle on Tuesday, into the trend line, Thursday, and then Friday of next week, and then Monday is like exploring like NFP, like total BS price action, and then so NFP is what Romeo says is that NFP is a lot of times the manipulation. In other words, like if we are just like grinding lower in the lead up to NFP, well, this is tricky. This is really tricky. Let's look for more clues. Obviously, we have a model number one. So if you're expecting a weekly CRT, you want a 4-hour model number one. We have a very like unsatisfying or because it's just with the relative equal highs, and we just didn't really see a good raid. We do have a turtle body soup if you want to, of the equilibrium level itself. And that itself was a turtle soup. So yeah, it's a little tricky, this reversal, and we're kind of digging into this as like kind of a breaker, and breaker entries are notoriously, non-raid like if they're the most, like what Romeo says about a breaker entry is it's very it doesn't lead to a lot of drawdown, right? That's one of his like things that he's encouraged us to notice. I do really see price like I really see like rising trendline liquidity, and just like zooming out a little bit, going back to the daily chart, like this is clearly rising trendline liquidity. This looks pretty well mixed, or pretty well efficiently distributed from a market making perspective. Like it looks balanced, in other words. This is very imbalanced still, in my opinion. So yeah, so I would target the consequent encroachment of this opposing FEG and just treat this like a classic, like is this a weekly? This is kind of like a weekly breaker. Yeah, it's kind of tricky. Hey, good morning. So yeah, so that's the euro. I think that's all I'm gonna do for this video, is just keep it focused on the dollar and the euro. Let's look at the pound really quick. So this is a weekly chart of the pound, and again, like the pound encourages the same sort of framework, but I would think The pound seems so much more bullish to me, because I think, and we noted this on like a previous weekend video, that the pound is actually on a more accelerated time frame. 1, 2, 3, 4, 5, 6, 7, 8. Yeah. So the pound is very much legitimately on a weekly time frame to get to this high. But that said, the pound has already hit, I believe, the 618 of the range. Wow, it hit it and it closed above it. So I think the pound's going to kind of like violate, like I think the pound, it's going to be the outlier next week with the foreign currencies. Let me make sure I'm getting this right. So that we have a 3 candle move up. We have a really intense pause CRT that doesn't even quite make it to the low. And then the second candle's low gets taken out a couple times. And then we have distribution off the bottom. Sorry, this is the monthly chart. This is the monthly chart. Okay, geez. But the pound's on the 1 month. So the pound, boy, I'm glad I looked at the actual time frame I'm looking at. We're expecting the pound. Let me draw this trend line so I don't get lost. We're expecting the pound off the peak manipulation lows to get to the range high by the end of the next monthly candle, which is actually October 1st. So in other words, the pound is set up to have a really great September, comparatively. So if you're trying to decide between being bullish on euro versus pound, pick pound. You probably already know this if you're trading the forex. Boy, that close, that weekly candle close, is really interesting. I can kind of see, this looks kind of harmonic to me. But yeah, the fact that we're already past the 618, it's like, man, like if the pound, so obviously we want the euro, but we're predicting that the euro is going to have a daily candle CRT. The pound could, let's do this. The pound is very much likely to dig back into this and just use that as a breaker. Yeah, that is a breaker. Kind of an upper. Well, it's really high in the range. It's not even really in the. But the way what you could say is, if you wanted to, you could treat this as like the model. What if we do that? So what if we say, that's not even locked, okay. What if we say that this, yeah, even still, oh, that's even better. Oh yeah, that looks even better. So that puts this in discount, which is what we want if we're going to try to dig into it as a breaker. It sticks. It's funny. It sticks itself up into equilibrium, and then it's back to discount. And there's some pretty good rising trendline liquidity that's still intact here. So yeah, that's the next few weeks in the pound. Not the next few weeks, but the next few days, really. It might be the NFP manipulation. Like we might really pause, and then NFP, maybe gets us like this awkward candle right here. I see that as like man, if we can take out that low in a violent way, on let's say like Friday, September 4th. Like if we wick down into that and then wick back up on that Friday, that's what you'd want to see. And then quickly resume back to the trend line to get us back to, by September 30th, by the end of September, the top of the range. So yeah, so and if we just, even if we just like take out, even if we just like take out that swing low, that daily swing low, that's very reasonable. I mean, that's a key level right there, that 1.35. Yeah. So just to review, we're at least digging into here, the opposing range fair value gap, and in the pound, we're at least digging into, well, at the very least, back into the equilibrium of this range, and then resuming, and this is a call not for next week. Well, it's bearish next week, but this is a call for next week, the following week, and even perhaps the 3 weeks from now. So that's generally the time frame that I would expect this to play out on. Yeah, I don't see. I mean, I'm trying to make a case for myself. I'm trying to make the case for bullish continuation and just like keep grinding higher and keep grinding higher. But the inefficiency in the Dixie and the Euro, I think the pound will basically shrug it off a lot more. But I definitely don't. I definitely warn you guys against being super bullish heading into next week on the foreign currencies. So yeah, that's good. That was focused. It did take quite a while to record, so I apologize. It was just a long rambling video. Yeah. Thank you so much for watching.